what happened last week, what may happen to next week, and based on some of the economic data that I am going to be sharing, then hopefully that will give you some ideas what you can do ahead of this coming week, and some of you might use this information to think of ahead, if there is any pullback for any stock or any kind of security that you are looking at. Everything I am sharing is educational purpose only. This is not a financial advice. Okay, now this is an important chart. I want you guys to take a look at this where you are seeing the big the reddish color or this color you're looking at it. This shows you the current situation of the recession market in the let me see in what happens when recession happens, typically a year before recession comes in and after recession coming in. So it's kind of, you're looking at the market, how market is performing in different assets, and based on those asset and performance that what may happen, and are we really heading towards the recession? That's the whole conversation in today. And also everyone's in mind, hey, we had a great past half 6 months in the market. Now what may happen? Are we okay, done with all this crisis and we're moving ahead and recession is not coming and so on?
Wow.
Based on this data, that's why it's a little bit crowded. Just what you're looking at, what happened to 1970s, 73 here you can see, and 80s, when we had a recession that time happened, and 2001 and 2007, 8, So it's trying to indicate around that time when recession happened, how did S&P performed during that time? Okay. But for us, look at it right now. We are here currently. It is stopped because we do not know next 6 months what might happen in S&P. That's what you are looking at. S&P stopped in the current situation here for 2022-23 time. Okay.
It wasn't that bad.
Yes. Now you look at that.
Oh, shit. Yeah.
Ron, are you speaking? If you are not, please.
Yeah. No. We are saying that the 80 looks pretty damn close to the current one.
Yes, right, exactly. But look at that. Every time, whenever that happened, recession happened during 80s, that time, like it was so high, all of a sudden it dropped like crazy.
Dropping.
And then it dropped. And same thing happened if you look at in 2000, around 2000, 2008, market was really there, S&P, and then it's dropped like crazy. Okay. So for us, we know there are certain things happen. S&P is risen recently versus typical weakness is risk. S&P is all-time high currently. Okay.
Right.
So I'm not saying we are going to go into recession. All I'm saying, just based on what happened before, and there are other indication in macroeconomics that you need to be aware of it if you are a short-term investor or long-term one. Now, S&P also, we know that it brings all the top 500 companies. Now, what happened to the small cap? Again, the same thing in 80s and 2000 and current market with this small cap situation. If you look at a small cap, the one happened is a year to date till now, it's still small cap is way down for current situation. Okay. Now back to here, that S&P, look a year from almost like 6 months a year, small cap is already, S&P is way higher. Small cap, if I compare that with small cap, that's still didn't go as much as what S&P went, right? Small cap risen recently, but it's still weak. It's not as strong as S&P, what we have seen. Okay.
Okay.
So last week, you remember that I mentioned that certain companies are leading the entire S&P. We already have seen the big caps, especially mega cap companies. 7 companies I presented last time. They are the one leading most of the S&P. Now, On small cap, we know that last week what happened, some of those big companies didn't pull back too much, but it did started pulling back. We did say that you are going to be seeing that money might be start shifting, and that's the early sign we are seeing that, hey, now investors are taking profit from the asset they think they're happy with. Now they will be shifting their money on some other areas. Okay.
Hmm.
So yeah, one of the things that take away from here, please, if you are not paying attention to small cap, this maybe this might the time you might want to look into some of the Russell 2000 small cap assets. Now we'll digest some of this what I just shared with you. The stock price have been increasing, we know that, and S&P index also is tracking all the top 500s, and which is giving you the highest level today. And we are seeing these good earnings is coming. These good earnings, what is that telling us? What is telling us that existing companies are already managing their whole current situation in a way they are still keeping the demand of their product to the customers and customer paying for it. People want to buy the product. We have not seen that that many companies are losing really big surprise so far what we are seeing these earnings, which is a good sign in the market, right? So those top CEOs are figured out how to run their business in this current economy. So investors are hoping that how can this they're balancing with this what's happening outside with that whole inflation war, what's happened with the recession coming up, what's happening also with economic growth. That's something investors are trying to figure out what's the perfect balance. So at the end, what we can conclude based on what you have seen that you are going to also see that some of the information I'm going to be sharing later on investors has is optimistic saying that maybe stock market it is it won't be we are now it won't be as bad as what happened before in 70s 80s and 2000 uh and 2007 it may not be happen they are how they're looking at seeing the sign for future growth economy we are not going into recession yet you'll see why not uh, during all of those situations that um what happened that unemployment you remember that we have shared a couple weeks ago that our last few weeks every time when there is unemployment number came out job opening numbers came out and we have shown you that look we are seeing the strong job opening happening but there are certain things we need to keep an eye on okay here you are looking into the current in unemployment number you see you typically a year when recession happens all the other times when in the 70s 80s you see that after recession happened boom it just went so high is there the unemployment number and so we know that this is something a trend of recession that an unemployment number might go higher. So if you are looking at last one almost like 12 months for us, right? So last 12 months, our unemployment number is staying almost like pretty much all-time low in last 20, 20 months, last 5, 10 years, unemployment number is very low. So they are saying that seeing all time last 10 years, unemployment number is staying low, although we have all this huge pandemic happen. We knew the recession might be one of the things heading, but look at all those time when that happened. This is another number that right now the Fed looking at very strongly. See what may happen. Okay. Um, to digest some of this information that we see that the job market yes we know the strong high a lot of openings we shared earlier and then because the low unemployment it's almost like when I said before last 10 years look the lowest in 50 years last 50 years unemployment lowest right at the same time, wages getting higher, and we are seeing that people are spending more money because people have job and they have the money, they go spend more money. So that kept the demand in the products. So those company who is doing well in the market is still there. So that's also giving pressure not to reduce the price for their business because they see the demand. Look at a company like Apple. It's crazy that in fact, even my son today, he says, and he has a bunch of other products out there. He said, hey, I saw this new iPad came in and this iPad I really wanted. I said, why do you want it? Or to look at Papa, it has this feature, that features, I'm going to go to college. I think I can use some extra storage. I can use these, airdrop features on this iPad. So these kind of thing, conversation happening every household. People are making more money. They're looking at, oh, 700, 800. My son wanted, I really love him. Let's go buy him that product, right? And hence Apple and saying, and no matter what happens, the economy, we are going up. We are not going down, right? So that also helps that the GDP economy that people are spending money. Those people have a job, right? So what is this going to happen? That are we going to go in recession or not? So I don't think we are getting into recession, and I don't think we are also getting into that. Some of you might be thinking, are we? So what does this mean? Is the economy is going to be slowing down? I don't think it's going to be slowing down too strong, but there are things that you need to be aware of. Like a number of jobs opening that we have seen that it became 9.8 million, where last time and a few weeks ago I shared, look at that huge number it came up with. So this is almost this number showing you we are even going above that pre-COVID, the COVID-19 pandemic around 7 million. That number is one of the benchmark they have. Now we are going above that. That shows the business are ready to start hiring for new type of workers. So a lot of workers, again, with the current economy changing, nature of work is changing, nature of our work, the day running business also changing. Hence, companies figured out we will need this type of worker with this type of skills. Nowadays, one skill alone is not going to cut it. You have to have a multiple skills skill set in order to be agile and also be able to not to be part of the layoff or unemployment cycle. So job market is doing very well. At this time, it's also helping the driving the economy. And because of that, economy slowdown and strong job market help to soften the impact that we are not heading into recession yet. It's not the sign. We saw as one of the things that you have seen a couple of weeks ago when I shared that you see that unemployment is number is one of the things that scared the market. That all of a sudden we are seeing the slowly unemployment rate is increasing. Job opening number is higher, that's good. But why all of a sudden unemployment number is increasing last 6 months? We know that at the beginning of this year, since last year, that late last year around October, ChatGPT came up, AI started booming, the whole industry started booming. And a lot of automation and things are happening within the companies. They are figuring out that the many repetitive tasks can be automated, hence, let some job go and create new type of job, right? So with this as that what's happening and the number of people are getting laid off, unemployment number is happening, and same time some people are stuck with the finding new jobs, right? They are also, that's also how much people are earning per hour. We I making an effect because whatever you made before and you think that, hey, this is money I used to make, now at this I'm not ready to compromise because I have to run my family, I have to pay for all these, hence you are stuck to finding new jobs. You do not want to compromise, go down. It's going to affect your unemployment check. It's also going to affect the data and so on, right? So that's what something is noticeable next 6 months that business are going to look into next 6 months, 1 year. As I said, typically it's a 1 year cycle. We are seeing the trend is not, it's we are going into recession, but unemployment number is one of the things that causing Fed and everybody, hey, why not we or is getting in that direction. What do we need to do? Control it. And that's also made a pressure now that conversation are happening that Fed mentioned a few weeks ago they are going to be increasing rate, where we heard about a few months ago they said they are not going to do this, right? And we had a couple of weeks ago, we saw market all of a sudden went down and boom, it started slowing back. Again, now confidence back that Fed is not going to do increase the rate. So what you are looking at, 70s, 80s, what happened in during that time when Fed increased the rate, Fed rate versus the recession. Now here you can see you for us again with the look at the reddish color one, we are around the 5% area, which we already know that rate is currently 5%. And then Powell say is going to come out this coming week on Wednesday. He's going to say how much he's going to be increasing and what Fed is doing in order to control those whole inflation and also making sure that economy is still strong and the investor confidence is still is high enough that way there is no panic in the market. Okay, so now let's digest a little bit more of this. Federal, we already said, Federal Reserve Fed mentioned that they are aggressively looking at this rate. They are increasing the rate for last, and we have seen the for many years have been happening, right? And this leads to slow down economy. We know that that's now for companies who wants to borrow more money, it's not as easy as before. It's the money cost a lot more than borrowing. So that also, impacting all those the growth companies. So inflation, one of the thing happen if inflation doesn't increase, the Fed might stop increasing the rates. We already said good for the stock market. If Fed is said earlier they're going to do it, later on they change their mind in April at some point, and now again that's we are going to increase. So this coming week, what my prediction that it's going to happen based on all the analysis, everything I'm hearing, that you might see on Wednesday, Powell is going to come back. They're going to be increasing another 25 basis point. On that, what he might say based on the data, we heard multiple times they said they may increase multiple rate or multiple times this year. I do think he might try to be more strong. If he says it's strong, that they think they are not increasing the rate 20 base after this. This is the last increase this year, but then they're going to be whole steady
I
for a
thought they were
while.
going to raise it twice this year already.
Well, they did say, but based on what I just shared with you, that
Yeah,
ISM number, those number, now they are under more pressure that hey, that we
not
need
to
to
raise.
give it a chance. That companies are still struggling. A lot of companies the who is still struggling in their performance. Remember, S&P is going way above not all the companies. There are 7, 8, 10 companies is the one leading the pack. The rest still is behind the
Yeah,
pack,
they're
right?
pulling everybody else up. Yeah.
Yes, correct. They, in order for that, you might see that, Fed is going to say, hey, we said we're going to do it, but no, we are not going to do it. So that will impact that all the other guy not leading the pack, they will have a chance, okay, hey, now they made it easy and we can go borrow more money. Okay. So hence you might see that they might will say that okay, well, this is it, and we do think that we are in a good shape. But it's still, Powell is Powell. You'll never say that this is absolutely final. So we are watching on it, and the market is going to be crapping. We know typically it does when he talks that day, and following day market does. After that, on Friday you'll see market again based on the outcome it might celebrate, another fireworks might happen in the market. Okay. So now what happened last week? We have seen it, and this tells you that last week Nasdaq was barely, as we saw, they were under the pressure, and then lost very little, not much, yeah, almost 1%. And the Nasdaq lost, but S&P closed the entire week positive, which is good. Dow closed positive, which is still good. So that means, whatever happened, the earnings came in, Netflix and Tesla, and they individually got affected, but overall market didn't get affected much. This coming week, we know there is a lot of other earnings are coming up, and then it's going to be also leading the pack where the Microsoft, Meta, Amazon, they are going to be start announcing their earnings. You are going to see that later, but for now, what I will be looking at just seeing what might happen on Wednesday. So some of the things, at the earlier week that the asset I have on my account, and then I'll just keeping an eye. If there is an opportunity to buy, I'll buy it. Opportunity, if I see green in an area that it's time to take some profit and sit there, which was good that I have done it like on some Tesla or something that right before earnings. I just had a hunch that it might shake up, so I took some profit out, and then after that, when it pulled back, added some of those assets. Same thing, strategy I might make it with some of the assets that I'm looking at. So that's about me, what I am so far shared. I'm open to take any questions you may have. And I see there is a lot of chat happens. Ron, I was not looking at it. So if there are any, I will just stop screen sharing and just see if anything towards me.
Yes, and you might want to tell them about this training that's coming up.
Oh yeah, thank you for reminding me. Oh yes, in non-profit organization website, as I said, Urban Food Alliance. When you go there, you are going to see that very top job training foundation. Um, First of all, just wanted to let you guys know that typically what happens this year when I said or last year I started doing helping people with their financial crisis they're going through, at the same time training them in some of the skills they have, and so they can work from home. So one of the program we created called 15 sessions, where we help people to understand what ChatGPT, what is Microsoft 365 and Microsoft Cloud, and then we teach people what's business analysis, project management, and then some of the Microsoft ERP Cloud, and then software engineering, and then how do you make money with the chat GPT, monetizing chat GPT, making money with the chat GPT, prompt engineering. These are the things we show people and say, hey, you still can make money. But typical this course, I have four of those instructors with me. Also, they are volunteering and coming helping. This guy is from Microsoft last 10, 15 years. He's working for Microsoft. And so together all of us teaching are typically that this kind of course $1,600, but I talked to them. I said, hey, we just want to give it at least to the common people, just for as it being non-profit, for 15 session $10 a session, like $150. You can see that yeah, 91% discounted rate. So this program is going to be starting. You're going to see that on that the starting date is here on August 6th. It's a 2 weeks boot camp, 8 hours, 8 hours. And then on one Sunday, another Sunday and 10 o'clock. I know it's 7 a.m. for you guys PST, but still we have people signed up, for this program. And here another 2 Sundays and then 2 weekdays, pretty much 20 hours the training. So we'll be doing that.
All right, Moshi, thanks for the presentation, first of all. The question for you is, the last couple of weeks, the banks released earnings, and it seems like they were doing okay for Q2, just like they were doing okay for like Q1. Like, I think the margins are bigger for those earnings. And so like the big banks earning are pretty decent. And recently with like airlines coming out with earnings, it's also been pumped up because of like travel demand. So the question for you would be like, with the size, like, you know, removing those sectors in industry, is there any like industry and sectors that you would say is going to be benefiting from the recent demand from the consumer?
Yep. Thank Dan. As I mentioned that earlier, that first of all, banking, you see that when they came up with their earnings also is good. But on the forward side, you are going to see that as companies are going to do well, like Microsoft, Apple, and they are leading the pack. When they're leading the pack, they are also raising their forward. When the companies are like Microsoft, big guys are raising their forward and they're saying, "Hey, we are the guidance is, we are increasing whatever it is, this that will help them to stay, not tank their current stock." We are seeing that happening with Meta, right? On the banking side, what we have seen that these, although it's a earning was good, but forward some of them are is not as good as market expecting. They are being cautious because of some of the things still happening in that industry. Okay.
Yeah.
So yes, that's why I do think that financial market is not out of the loop yet, because if Fed continue on, so we know they are the tightening in not only one area. Fed rate is one, and another one, and other regulation they're going to enforce in there that will causing people not to be able to borrow money. We are seeing that sign on still that in real estate for a long time. Real estate is suffering. Still, real estate market is not recovered, but it's not going down in the housing as bad as they expected.
So
Steady.
last question is how come for the real estate market, the supply is so low right now? Why are they not building more houses at the moment?
People, when you start doing any of those new stuff, you need to have new money coming in, right? Borrowing money or investment. People are afraid, what might happen. And
Right.
those who has cash, yes, I know a lot of people sitting with the cash.
Yeah.
Million dollars cash. They have straight cash sitting on their account.
And they won't touch it.
They won't touch it because they do want to see what might happen, not only next 6 months, next 9 months, next year.
Right.
Next year after March, April, we are going to see that are we really out of this recession thing in there?
Well, not recession. You mean
Is this
inflation.
whole inflation, recession you are talking, and then this whole unemployment is the one danger right now happening because of this AI that companies are
push unemployment
figuring
higher.
out AI every single way. I used to hire a lot of the freelance worker before. Now, because of the AI, I don't need that many freelance anymore. Because today, in fact, I'm looking at getting AI. I'm paying like a whole year $500, and it's going to be year service that I would be able to do it. Where I was sometimes in a week I spend that much money. So that's what we are talking about, my friend. That's causing that whole fear in the market, and then the automation coming in. Companies are now more than ever they want to automate everything they can.
Because I'm just struggling to see like how come the home building equities they're benefiting so much from the current market condition for real estate when the supply is so low. It just seems like it doesn't make any sense.
Certain areas, it also depends which area you are looking at, right? I know those certain areas is all even Manhattan. You look at Manhattan, and I am looking also in investing in certain areas in Manhattan in commercial side. Before it was slow down before, now I see the place is empty, but the price they're asking, we're giving an offer, then reducing the price. So no, this is what I want. They know it's still low. The demand is low, but they know the slowly there are others who's going to come up with it. They don't want to go lower than whatever price it is. But in January this year, last year November, it was way lower in that commercial market in Manhattan.
Okay.
Huh? So they would rather keep the place empty, not to reduce the price.
That's it for this episode, folks. Thank you for listening. And if it was helpful to you, please click the like button and follow us so that you can listen to more of our podcast. You can also visit us at urbanhood.org to learn more about our other programs. We hope you'll check in with us again. And until then, keep learning and do whatever it takes to reach financial freedom and follow your dreams.